What is going on, investors? Hopefully you guys are doing well out there. It is time to talk about Amazon.com. Ticker symbol AMZN. The company just reported their Q4 earnings. They came in. They did miss on revenue. We only have 9.4% year-over-year revenue growth, but the stock is absolutely popping in the after hours. I have it up right now at the current time, up 16%. That's a good $457 per share. So if you're like me and you own about 4 shares on this one, you're probably going to go out and have a steak dinner with the family because this thing is moving in the after hours. Now, over the last year, though, this thing's been dead money. In fact, it's down 10%. So today's gains, if they hold into tomorrow, will actually turn your Amazon positive in terms of performance over the last year. On today's show, talk about what's driving this growth in the after hours and why people are so bullish on Amazon all of a sudden. We'll take a look at the revenues, the profits. We'll take a look at the net income and what that was bolstered up by. We'll take a look at the cash flows and the balance sheet over at Amazon. I did want to show you a couple of other things. Some, I would say some worrying trends with Amazon, but it seems to me that maybe investors are kind of either looking past them or thinking maybe the worst is over for Amazon. So we'll talk about that. And then we got to look at this from a technical perspective. We were actually well below an area of support that we've had marked out on Amazon for basically a year now. We were trading just below it. I had fears that if they put up a stinker, there was not, and I repeat, not a lot of support below this level, and it could have pulled a Facebook, but it did not, and we actually went in the opposite direction. In fact, we went through 2 layers of resistance that can be incredibly bullish for Amazon. We'll talk about what that means from a technical perspective. Now, there's a couple things in this press release and this earnings which I think are helping drive up the share price in the after hours. First of all, revenues came in at $137.4 billion. Yeah, that's not for a year. We're talking about just a quarter. Obviously, the Q4 for Amazon is absolutely sensational. That's growth, I would say, just 9.4% year over year. And then when we get over these financials, I'll actually show you that they actually didn't make a lot of money on a lot of these net sales. Obviously, the AWS business is absolutely profitable. We'll talk about that. Speaking of AWS, sales in that business unit came in at $17.78 billion versus $16.11 billion just a quarter ago. We actually saw 40% revenue growth on that AWS business unit. Everything else relatively in line with what you'd expect over at Amazon. Now, I think the key thing that a lot of investors are looking for, and I did see rumors that the monthly price of the Amazon Prime membership in the United States will go from $12.99 a month up to $14.99 a month, and the annual membership will go from $119 per year up to $139. This is similar to like a Costco membership. As you can imagine, this $20 price increase on this annual membership will flow right to essentially the operating income side of Amazon as those price increases happen. I think it's sometime later this year. This is the first price increase on Prime since 2018. Now, in terms of our upcoming guidance, so we just talked about Q4, right? Revenues came in at 137. When we get over to the financials, I'll show you where these revenues are. I'll show you all the cost and all those types of things and show you how actually from a profitability and an operating perspective, it doesn't look that great for Amazon. But again, I think some investors are looking forward to the fact that they just did a $20 price increase on Prime. That should flow right down to those operating income. Now, in terms of the guidance, net sales for the first quarter, that's the upcoming quarter about to be completed over at Amazon, you're expecting revenues between $112 and $117 billion. That's growth between 3 and 8%. So we just put up a quarter where we grew 9.4%. The upcoming quarter, if they're towards the high end, will be a similar type growth rate, 8 to 9%, if they come over this 117. And that's compared to the first quarter consensus of $120 billion. So they actually came underneath their first quarter guidance that Wall Street was expecting on that revenue side. Operating income, which I don't necessarily think a lot of investors are paying attention to, coming between $3 billion and $6 billion. That was compared to about $9 billion in the first quarter of 2021. Obviously, a lot of investors, I think, are also giving this company a pass. The fact that they've had to invest so much into this business this. We'll see evidence of that when we get to cash flows. And obviously with the virus and the health situation, this is impacting this company as well, since they have so many employees and so many touch points in the economy. So here's our most recent quarter. This two left-hand columns here. The left-hand column is last year. The middle column or the second column is this year. And then since this was Q4, we get kind of a 12-month view on that revenue side. We had our revenues come in at this $137 billion. We see for the full year, $469 billion. I don't want to like flow over this like this is, like we're just kind of walking past a stop sign on the street and we barely noticed it. No, this is just unbelievable. There's really no other company, maybe one other company when you look at like Apple, that is putting up these types of revenue numbers, okay, on a consistent basis, like north of $100 billion. $137 billion obviously gives you a lot of revenue to play with, but it doesn't come cheap. Take a look at our cost of sales. Those came in at $82 billion. Our fulfillment cost, $22 billion. Look at our fulfillment costs just over the last year. They went from $58 billion all the way up to $75. It is incredibly expensive for this company to start delivering this stuff to their customers. Technology and content coming in at $15.3 billion in the most recent quarter. Marketing coming in at $10 billion. That was an acceleration, it looks like, over the previous quarters as well. Obviously, you'd expect that in Q4, a little bit more increasing marketing. And general administrative came in at $2.5 billion. All in all, our total cost for the last 3 months went from 118, and this is in billions, up to 100, and we'll call that $134 billion. You see for the full year, you went from 363 all the way up to 444. Now, what did that do to our operating income? So you come up here to our revenues. Those came in at 137 billion. You minus off $133 billion in cost, and you get just $3.4 billion in operating income. That's why you've got to play the long game and have the long view when you look at an Amazon, especially when we compare this to a Google, a Microsoft, a Facebook even, really any of these other major FANG stocks. They're clearing a ton more money to this operating side, but Amazon obviously gets away with it to a certain degree because they are playing the long game in terms of capturing customers. They also increase this pricing on their Amazon Prime. That should increase our operating incomes in the subsequent quarter. Not necessarily the upcoming quarter, but likely 3 to 4 quarters later. That's when you'll see the vast majority of members will renew at that higher price. That should bolster operating income, we would assume, over at Amazon. Now, look, we actually cut our operating income in half year over year. You went from 6.8 down to 3.4. Look at it for the 12 months. You went from roughly 22.9 up to just 24.9. So just a 10% increase on this operating side. So this is a company that is just running a razor. I mean, we're talking about a razor thin margins. And quite frankly, earlier in the year, this company was printing a little bit better operating income figures. This is kind of a disappointment in my book, but look, it's not for me to decide what's good and what's bad about this company. Obviously, shareholders are liking this. Wall Street is liking this. Again, this stock is holding its after-hour gains, at least at the current time, up 17%. Now, when we come all the way down to net income, one of the reasons why we focus so much on operating income on this channel is because when you come down all the way to net income, look what happened over at Amazon. You went from 7.7 billion all the way up to $15 billion on income before taxes. You come all the way down to net income. It basically paints the similar story. And why is that? You have this big, nearly $12 billion other income. This was based on Amazon's investment in Rivian, which went public, and they netted out a massive gain on that investment, nearly $12 billion. And so, yes, this company, when you come all the way down to the net income, this is when you look at price to earnings ratios, when you look at this EPS coming in at $27.75 per share, the consensus for $3.54 per share. So when I saw this press release come across and I saw Amazon stock spike, I thought maybe initially it could be due to computer algorithms seeing that EPS came in at $27.75. But look, the after hours gains are holding. Investors have already had a chance to digest these earnings. Yes, having $11.9 billion flow onto your operating income or your net income side of the business is great, but is not necessarily something that we can continue to see over at Amazon. So I do want to stress that yes, we had nice 9% revenue growth, but we actually saw our operating incomes cut in half over at Amazon. But again, we talked about that Amazon Prime increase. I think some investors are already starting to look to the future with Amazon. Now, they lead with cash flows over at Amazon when they put out their press release, but I tend to want to look at the operating side, and then we come up here to cash flows. It makes a little bit more sense. You pull down this $14 billion net income, which again, we know most of that, in fact, about $11 to $12 billion of that actually comes from that Rivian investment. And we add back in things like depreciation, which is a tremendous charge over at Amazon whenever you're building factories and building fulfillment centers. More specifically, you get a lot of depreciation built up into those. And you also have a fair amount of stock-based compensation in this one. We come back through, we actually get to take away, this is why I think actually analyzing this from a cash flow perspective is good for Amazon. We actually strip away that gain that they had from that Rivian IPO, and we see our net cash provided by the operating activities paints a similar story to the operating income. We went from $30.4 billion in positive cash flow in a quarter down to $22 billion. So that does paint a little bit better story though, because I talked about how this is a company with just $3.4 billion worth of operating income, but understand baked into some of those costs is depreciation, which is non-cash, and also share-based compensation, which is also non-cash. When you factor in those types of things, this company does have still relatively strong cash flows, but it is not as good as it was a year ago. But again, I think some investors, obviously, at least in the after hours trade right now, stock owners are giving this stock a pass because they're looking towards the future with Amazon. Notice you went from $66 billion in positive cash flow down $20 billion in the most recent quarter down to 46. Now, where is some of this cash flow starting to bleed out of this company? We see purchases of property, plant, and equipment here. You went from 14.8 last year all the way up to 18.9. Look at over the last 12 months, you went from $40 billion in purchase of property, plant, and equipment all the way up to $61 billion. Yeah, guys, this company spends about $5 billion a month investing in property, plant, and equipment. That is where a ton, in fact, the vast majority of this company's cash flow is going to. They continue to reinvest in this business. That is one of the allures and one of the advantages of an Amazon investment. If you believe that all this investment is one day just going to start printing money like a Microsoft, like an Apple, like a Google, well, these investments are much needed and will eventually, hopefully, lead to higher amounts of operating income and essentially net income from the business in the future. That's what investors are betting on. Now, in terms of their financing, looks like they did a little refinancing, okay? They took out a little bit of debt, 2.6, but they basically paid off the exact same amount. All things being considered, when you factor in investments and some debt, this company increased their cash position in the most recent quarter by about $6.3 billion. Over the last year, it bled out about $5.9 billion. When you get down to the balance sheet, you'll see not necessarily the worst thing. Now, what I did want to highlight on today's show, when we look at Amazon, obviously they run multiple different business units, and we'll take a look at some of the other things like physical stores here in a second, third-party sellers that sell on the platform. We'll also look at advertising as well, and obviously AWS. But what I wanted to highlight is actually our operating income from actually the traditional Amazon.com business turned negative in the most recent quarter. And so the bear case argument is going to come again, likely in the next couple weeks and months ahead, is that AWS is the profit center of Amazon. That wasn't true last year. Notice that selling on Amazon.com produced nearly $3 billion of operating income in just a quarter. For the full year, it produced 8.6. Now, for the full year with Amazon, you still produce $7.2 billion. This is just in North America, Amazon.com. But you see for the most recent quarter, it was challenging. They actually lost money. Off of $82 billion worth of sales, they actually lost $206 million. Now, what we also talked about with Amazon is their international business was just scaling up when the pandemic hit, and then it turned profitable. I was excited about that. Now, that obviously has turned negative as well. Whenever you see the United States operating income turn negative, you could bet international is going to turn negative as well. Off $37.2 billion worth of sales, they actually lost $1.6 billion. on that. Now for the full year, paints a similar story. We're basically break even on that international off $127 billion worth of sales. You actually lost pretty close to $1 billion where you made $717 million. The international sales business of Amazon is still at a tipping point. It's not profitable. You'd like to see that turn around sometime this year. We'd also like to see it turn around in the United States. If this continues, the fact that they're actually losing money selling items on Amazon.com, that would paint a very, very bad story. Again, considering they made $7.2 billion over the last year, despite losing $206 million in the most recent quarter. Now, AWS, thank goodness for AWS. Dude, this is why they cannot spin this business out. Sure, they could probably get a hefty valuation for it, but all of a sudden, Amazon.com, the stock, would lose a lot of its profits because take a look at AWS. Off of $17.7 billion worth of revenue, you pocketed $5.2 billion. That's absolutely fantastic because in the previous year on a quarterly basis, you made just 3.6. Now, for the full year, you made 18.5 on that AWS business. So yeah, sure. You lost money in the most recent quarters. You lost money in the most recent year on those international sales. Doesn't paint the same picture for North America, but all things being considered, AWS holding this company up nicely from the operating profit perspective. Now, the last thing I'm going to show you until we get to this from a technical perspective, which you can imagine has completely reversed in this after hours. We're up 17% on this one. It has taken out 2 layers of resistance on this one, and that can be an incredibly bullish sign for a stock. We'll talk about that in a minute, but I did want to take a look at a couple things. So this is online stores. This is obviously Amazon.com. I think they own Zappos and a couple other places. Notice that we've come to a screeching halt in terms of our year-over-year growth. Look, Amazon.com was actually growing in that 30-40% range. Obviously, spurred a little bit by the pandemic, the growth of online sales. Obviously, we know some of this growth was kind of baked into that. We knew it wasn't going to repeat, but take a look how it's gone to a screeching halt. It grew 13% in Q2, down to 3% in Q3, all the way down to basically break even in Q4. We made $66 billion. We had about the same in Q4 of last year. That is not good. Now, physical stores, obviously we saw those actually decline in revenue over the course of when the pandemic hit. You would expect that to come back, and it has. In fact, it's accelerated. It went to 10% growth, up to 12% growth, now up to 16% growth. Wouldn't surprise me if over the next 12 months, Amazon continues to invest actually more in physical stores, because that's actually where we're seeing the sales growth. They had $4.68 billion worth of sales in the most recent quarter. Last year, they were sitting at $4 billion. So nice growth there. It'll be interesting to see in subsequent quarters, will this continue? Is this just the result of reopening and obviously going up against soft comps where stores were closed, people didn't want to go out? Or is this actually a trend that will continue? We'll definitely see that. Now, third-party services, this is people like me that sell stuff on Amazon. We are seeing this is coming to a screeching halt as well. So it's not just Amazon's own first-party sales. We're actually seeing this start to decline. I obviously saw it in my sales, just anecdotally as well. My sales have declined a little bit. Okay, I haven't invested as much as inventory over the last 3 or 4 months, but we see just 12% growth in that business unit. So Amazon has got to continue to support their third-party sellers, because quite frankly, when you're only growing your total marketplace by 1%, when 12% of the growth is coming from the third parties, that's actually where most of the growth is happening. They came in with $30.3 billion. It was at $27 billion a year ago. But again, we've seen that growth go from the 50 to 60% all the way down to 12. Be interesting to see in the upcoming quarters. Now, where we saw a reacceleration and what probably has investors very excited, I would expect likely the news about Amazon Prime membership going up. This is having investors very excited, but probably what has them even more excited was a reacceleration of the Amazon Web Services businesses. We grew to 40%. Last quarter, we were at 39, but take a look. We were growing in that high 20s to 30s. That is accelerated back up to 40% growth. And we obviously, I just showed you how profitable those business units are in terms of AWS. So that is good. When your most profitable center of your business is growing actually the fastest, That is what gets investors excited, and that's why, and potentially why, this stock is absolutely soaring in the after hours. We're up 18%. We were down here before the market closed and Amazon reported their earnings. This stock was down here at $2,779 per share, and I'd be lying to you if I wasn't sitting on about 4 shares of Amazon, and I was a little concerned because underneath this level, there's not a lot of support, but we have popped up above this area of red right here where we were actually sitting underneath it. Well, we can turn that back to green because now this, instead of resistance, it's support, because our stock has gone from down here all the way back up here. I even had a little thin blue line right here. Make this a little thicker so you guys can see this. This is kind of an intermediate area of support. You see that the stock, it's chopped really for the last year. If you follow our channel, we cover Amazon every Friday and we look at the technicals. The stock was traded between $2,900 and up to about $3,500, basically in lockstep for over a year. There was an intermediate level though right about here, and you can really see it over the last year or so. The stock would stop here at about $3,100, $3,200 per share. Well, we're actually broke above that as well. So now I actually see this level as temporarily a level of support as well. This is very, very nice. And now we're looking for a retracement all the way back up to this level up here. We'll make this red because this is an area of resistance, all the way back up here to $3,500 per share. It wouldn't surprise me, especially if the conference call goes well over at Amazon. Analysts digesting this quarter, coming out with notes, maybe doing upgrades on Amazon based on the things we talked about, the strength of AWS, the fact that it's extraordinarily profitable, also the tailwinds of potentially some of the pandemic being over. Hopefully that could help business as well. And obviously this price increase on Amazon Prime could get this stock all the way back up here to $3,500 per share. If you've been in this one shorter term, you bought this one down here, this could be your first time to sell, because as we've seen with Amazon over the last year, it gets to 3,500. It often gets rejected. It's gotten rejected multiple times, 3 or 4 times at 35. If it peaks its head over 35, that can be bullish, but it tends to then stop almost on a dime at about $37.70 per share. We get above that and it's tremendously bullish on this one. This stock could run another 10, 20% if it gets above that, and that could be fantastic. But in the shorter term, this is looking really good, okay? We were making a series of lower lows, lower lows. We consolidated down here near our area of support, and now we've created a higher set of lows. If these after hour gains hold tomorrow, the stock closes above 3,200. That's incredibly bullish, quite frankly, and it wouldn't surprise me if this stock continues to walk up to $3,500. If you are concerned about Amazon, you're not really sure about the online store growth, you're a little disappointed in the fact that this company's net income was mainly derived from the fact that they had an equity investment on one of the hottest IPOs in the market, well, you know, you could take a little bit off the table up here at $3,500 per share. I think as this stock continues to move higher, you can start to decide if that is something that you want to do. Me personally, I got diamond hands on this one. I'm waiting for the breakout above 3,800. You break above 3,800, look out. This thing could continue to run. But in the shorter term, technically looks really good from Amazon. In the shorter run, I'm still a little concerned about the online store growth, and I'm interested to see how that will progress. See if we can reaccelerate that. Just like we reaccelerated AWS growth, not only from a revenue, but also a profit perspective. I'll be interested to see if the rest of these business units grow as well. We also see advertising services as well. Those were growing in that mid 50, 60, 70%. That tanked all the way down to 33% revenue growth on that advertising side. So we saw a slowdown across the board over at Amazon on everything except AWS. It'll be interesting to see how they follow this up in upcoming quarters. Certainly with this price increase on Prime, that will help things out as well. And we'll see how things move forward with Amazon. That was today's video. Hopefully you guys enjoyed that one. We can all take a sigh of relief, because if Amazon put up a stinker, holy crap, this market was about to turn lower. They are going to hold it up at least for the shorter time being, and we'll see how things progress. We'll see you again tomorrow for the Fang Stock Recap Show, where we'll talk about Amazon more in depth on that one. Hopefully you guys have a great day today. Good luck with your investments.